Back to the BNN top line right now, and fears are growing over frothy housing markets in Vancouver as well as Toronto. The Canada Mortgage and Housing Corporation says construction of new homes saw a resurgence in February, exceeding forecasters' expectations. So let's get a little bit of a better snapshot now of the health of the Canadian housing market and what it tells us about the risks facing the overall economy. Robert Hogue, senior economist with RBC, is joining us now. Robert, good to be with you today, and I think it continues to defy people's expectations in terms of how strong the Canadian housing market is. Does it lead you to have concerns about the health of the housing market?
Well, we always have concern about the health of the housing market. However, this morning, we have to keep in mind that this morning's number, it follows 2 months of statistics on housing starts that were on the weaker end of the scale. So this morning's number of 213,000 starts in February kind of brings back the 6 months moving average to about where it was a month before. So we need to keep that in mind.
But when you take a look at some of the regions, in particular Vancouver, and BMO's out there saying today that we've long been defenders of the Canadian housing market against so many bears, but activity in Vancouver makes that case a lot tougher to make. Are you in the same camp?
Well, again, I would just guard against a 1 month, particularly 1 month of strength on the housing starts side. I mean, it is clear that the Vancouver market is hot. It is a very, very tight market. So what we're seeing with this morning's number is that builders are responding, putting more units into construction to supply the market. Now, obviously, a lot of the heat in Vancouver is on the single detached home side. And most of the units that were started in February were on the multiple sides, so it might not be addressed perfectly where the needs are, but nonetheless, it is a supply response to a very, very tight market in Vancouver.
Do you think that's sustainable?
The level that we saw this morning, no. In Vancouver itself, it's over 37,000 units, which is one of the highest number that we've seen in that market since we've had the statistics on starts. So, but nonetheless, I think it's pretty clear that the market is very tight. As I've said, there's obviously it's crying for more units, and this is what the builders are putting forward.
Robert, when you take a look at the Canadian housing market, and I know you've talked about the divergence that's going on, we talk about it a lot here as well, of course, in terms of where we see strength and where we start to see real weakness. What does that end up doing to the economy?
Well, I mean, it is a reflection of the economy. When you look at the sharp contrast between the housing markets in BC and Ontario with the housing market in Alberta, it clearly shows that where the relative strength is in the economy right now, and it's not in Alberta. Alberta is, as you know, is having a very difficult times in terms of its economy, and in fact, it is clearly in recession right now, and that's being reflected in the local housing market. Now, obviously, in the case of Alberta, once you get into a weak and still weakening housing market, it feeds back into the overall economy in the form of, among other things, in the form of lower starts that we saw again this morning in the statistics. So it's unfortunate this downward spiral that continues in Alberta, that's continuing to weigh on the overall economy.
Robert, when you take a look at the Canadian housing market, though, do you have concerns? What is your outlook?
Well, we're in terms of home resale activity, there's a distinction to make between the new home construction and existing home market. Overall, and again, it's for what it's worth. Overall, it's very kind of flat this year, and maybe a slight decline relative to what we saw last year. And again, very sharp contrast across the country, continued strength in Ontario and BC, but Alberta continues to be weak. In terms of housing starts, more or less the same picture, although we do think that the weakness in Alberta will kind of prevail in the sense that over the overall starts, we're expecting them to start to go down a bit more going forward. So probably in terms of housing starts, we're going to see a bit more of that weakening trend taking over. But again, we're not talking about a crash in the market or a significant downturn overall, but nonetheless a downward trend in terms of new home construction.
What's the biggest risk, though, to the Canadian housing market? Is it interest rates? Is it people losing their jobs? What do you think?
Well, all of the above. Probably at this stage, people losing their job, the rise in the unemployment rate is probably a bigger risk than the rise in interest rates. It looks like that is not really on the table at this stage, at least with respect to the Bank of Canada. But certainly the weakness that we see in the job market in Alberta, there's obviously concern that it may spread. At this stage, we don't think it would spread that much, but that's probably the risk at this stage.
Okay. Robert, good to be with you today. Thanks so much for joining us.
It's been my pleasure.
Thank you.